So, welcome to the Spaces. This is our bi-weekly Spaces that we host every Sunday as well as Wednesday. Uh, every week, we talk about what's happened in the financial markets, what's supposed to happen in the coming week, and what we are seeing trending up and down in regards of economic data, in regards of other elements of the economy. If you don't know, the Financial Summit is a yearly event which is held at luxurious spaces. Last year it was held in Dubai. Before that, we were in Bali, and next year we're going to be in Maldives in March of 2025. So, if you guys haven't visited our website, do visit thefinancialsummit.com and book your tickets early for March 2025. It's going to be an insane week where we talk about finance, learn finance, meet other like-minded people. You will have people coming from hedge funds, money managers, family businesses, VCs, a lot of Bitcoin enthusiasts, and a lot of other technologists who basically come there to learn from each other. So if you haven't already, do visit our website, and it's going to be a lot of fun. So today, the topics that we are planning to cover are as follows. So we are basically looking towards global equity and some PBOC injections in the Bitcoin in the crypto market. Also, we're going to be talking about the USDT dominance and how it is going to be impacted. Some talks about Binance, not just from the perspective of the court cases or anything, but from the perspective of its performance as a exchange at this point of time in in the crypto world. We will then move on to and talk about the bullish term, OBV, and all of the things. Carrying on into the ETF updates and going forward, we'll talk a little bit about some macro side of things about the debt, that the US total debt, onto the current constraints that we are looking at, and where do we stand in regards of that, and a little bit about Federal Reserves. Well, we have Tone here. Welcome, Tone. I hope you are up and running now.
Yeah. Finally jump on. Sorry, I was a little late, guys. I see a lot of people already in here, including Joe Carlasare. Hope he's able to speak as well. Man, so much has happened since our last spaces. I want to tweet this out. I haven't even done that yet. Let me do that now. I'm gonna just stay off mute, but go ahead.
Also, welcome, motorists. I saw you were there last time as well. So if you have any sort of things that you want to talk about, any sort of inputs that you guys have from all of our listeners, if you have any sort of inputs, do not hesitate. You can either comment it in the right side corner, or you can ask us to invite you to the stage. And if we think you're not a fake account, we will surely invite you and give you a chance to speak up here. Welcome, Joe. How are you doing?
Yes, good morning. How's everyone?
Very well, very well. Just trying to get the year, the first month of the year finished in the next 2 days. Didn't even realize we are out of January so soon. But well, looking forward to today's space.
Oh,
So
and
let's
and
start off, guys.
this week's going to be absolute blockbuster, guys. I mean, I was trying to, count up the headline, the market moving events. You've got, I don't know if you previewed that because I was just joining a second ago, but you've got the QRA, you've got the Fed, you've got mega cap tech earnings. I mean, the list goes on and on. So it's going to be great.
Oh, it's gonna be a fun week. We have, to be honest, we ended the last week on a very, very fun note. So why not we start there, Joe? Why not we start from the macro perspective and not try to jump too much into Bitcoin straight away? So Tesla, the elephant in the room, one of the biggest tech companies that is there in the world right now. They have seen lots of movement in price in during their earnings, before their earnings, and have basically outperformed the market a lot of for a lot of years. What happened to their earnings? I think it was on Thursday, if I'm not mistaken, Thursday or Friday, Thursday. Such a slump. I think they were down around 12% and on their earnings after their earnings. What are you expecting from Tesla in the long run, Tone? If you want to start off, and then we can go to Joe.
Joe, if you want to jump in front of me, I'm just pulling up the chart of Tesla. I'll make it real quick. I do not keep up with the fundamentals of Tesla. I just they did not beat earnings. I know that, but they didn't beat earnings last time either, and they crashed quite a bit. They rallied nicely, almost back to the pre-highs after an initial sell-off with the earnings. I did hear a bunch of stories how if you had a Tesla in the Northeast and it was so cold, your Tesla wouldn't start. That certainly doesn't help matters. And yeah, from a TA perspective, the chart looks bad. It's been in a downtrend since July of last year. Looking at the daily chart, they just made a new low, so the longer term prospect of Tesla is bearish. But on a shorter term scale, since they dropped in December in a bull market, it's I think they're a little bit short term oversold. So I would be surprised to see a bounce in Tesla in the near future, even though the longer prospects of Tesla are a little bit weak with its all-time high taking place in November of 21. The stock market is now at a new all-time high, and Tesla is down like 50%. So they are severely underperforming the market. And but I still think Tesla has a bright, long-term future. Intermediate, I'm bearish. Short-term, it's probably going to close the gap that it created on earnings. That's kind of my short-term view on Tesla.
Yeah, so it's not actually in my view, okay, obviously no one knows what makes a price move, but I don't actually think what caused the plunge is the earnings estimates missing by, inside of, I think, $1 billion. I think the real reason why you saw the price action, at least from investors from a fundamental standpoint, is you saw them revise down forward guidance. Right, they expected continued slowing in the market share and actually a loss of market share to some of its competitors. So that's what I think caused the reaction. Usually it's the not the current earnings, but really where the guidance is. And one of the reasons they do revise down the guidance is so that in the future they can crush those numbers, right? I call it actually I stole this term from Lance Roberts. He's millennials earnings season, right? Because when you guide down, then for future quarters, when you hit or exceed those, then everybody says, wow, they beat estimates and they're doing great in terms of growth and the bottom line. So to me, like the bullet to the head is sort of done. I think the move is done. I think if the market's trending higher, and the Tesla has a good share and passive bid from the S&P, I don't expect. I think it's a little overdone here. I expect it to move higher. And to Tone's point, a lot of stocks peaked in November of 21. Bitcoin peaked in November 21. We're not anywhere near the all-time high, right? Even now with the halving approaching. So I actually don't think that this is altogether terrible for Tesla. I think they got rid of the bad news, right? And everybody panicked over the forward guidance. And if they have modest growth, which is in line with what I think they're expecting right now, I think most of the damage is done.
Welcome, Nikki. How are you doing? It's been a while. We haven't had a chat.
Hi, welcome. Thanks for having me. I just popped in, so I'm a little late.
No worries, no worries. We just started off and we were talking about Tesla and their earning calls. I think it was on Thursday, and the reaction that the market saw afterwards. Nikki, what are your initial views on Tesla and its current performance over the last few months? To be honest, this month at least, where Nasdaq has been trying to create new highs, but Tesla is seeing a proper downtrend continuing. What's your view on it?
You were cutting in and out. I don't know if that's on my end or if.
That's for you, yes. What happened?
Can you hear us, Nikki?
Yeah, I don't know. But
Am I audible to you guys?
You are.
Okay, no worries.
Can you guys hear me? Can you guys hear me?
Yeah.
Yeah, we can hear you. Okay.
Just one other thing real quick before we go back to Nikki and see if she's got her mic fixed. One of the reasons why their guidance for forward quarters got revised down is because if you've been following Tesla at all,
Try to
and
come back
full
in.
disclosure.
Go on, Joe.
Full disclosure.
She's trying to
Full disclosure.
Yeah,
I am a Tesla shareholder. I'll just say that. But one of the reasons why their earnings growth got revised down is because what Tesla's been doing, they were losing a ton of market share in China to BYD, that company that the mega Chinese EV maker, is that they were slashing prices for most of 2023. They were slashing prices significantly to try and incentivize people to buy the EVs. And that's part of a long-term strategy for making EVs more affordable. And what they're hoping is that the price point can get down a little bit further, particularly for the entry lines, that can cause considerable growth in the future. Obviously, there's a lot of factors in play. One of the things you tend to see in the EV market is that EV sales tend to rise when gas prices are higher. In other words, in 2022, we had really strong EV growth, whereas in 2023, where gas prices have gone lower, you haven't seen as much demand. So, part of the EV bid, I think, is also like sort of an implicit, expectation of where gas prices are going to go. So, if you're bullish or bearish on crude, that can be a factor as well, and refineries. So, you got a lot of factors in play, but the question really is for the future here, is EV can continue to gobble up market share? And, their competitors, Ford for one, is slashing their EV budgets, and Honda the same. Can Tesla continue to dominate in the EV space? And, that's the real question. And, it's a guess, it's a gamble.
I'll jump in real quick as well. I'm actually not familiar with the company you just mentioned, Joe. I just looked up BYD. Maybe I didn't spell it right. I didn't see anything Chinese. But I do know NIO is a Chinese competitor to Tesla, NIO, and that stock is down 90% since January 2021. That is just abysmal. Quick comment on, yes, Bitcoin is also down from 2021. Bitcoin is down maybe 30%. Since that time, Tesla is down, I believe, more than that. But the difference is the stock market and the NASDAQ are new all-time highs, and Tesla is still down like 50% or something since those days in 2021. Maybe not 50, but about 40. Let me just check real quick since I have the chart up. Tesla is down, 55% since that October 2021 period. I'll also mention that I think people are starting to wise up. These, climate crazies are, they're stepping up, and they're really showing how crazy they are. And more people are realizing that these electric cars are actually more dangerous for the environment than our traditional gas power cars. And they actually are. And anyone that doesn't believe that is being brainwashed by the green agenda. It's a lot more. It's worse for the environment with the cobalt that needs to be mined, and what to do with these batteries when they die. Same thing with wind farms. Look, there's an argument to be made that electric cars are better. Obviously, if you're standing right next to an electric vehicle versus right next to, a diesel-powered truck, for your personal health, obviously the electric vehicle is going to be better. But claims that electric vehicles are better for the overall health of the planet and for the environment are ass backwards. And I think more people are coming to this realization, and less people are that interested in an electric car. Now, Tesla is still super cool, but this attempt by governments to turn every car electric by 2030 or 2035 or even 2050 is like a pipe dream. It's never going to happen. So maybe, go ahead, Joe.
No, I was just going to, so BYD, I actually just confirmed I posted in the nest, just in case you're interested. BYD is now the world's largest EV maker. So in China. So if you're interested in checking out, I think
I didn't know that company. I need to do some research on them for sure. Thank you, Joe. Go on, Tone, if you wanted to complete before I go to Nikki. I think Tone's on mute. So Nikki, can you hear me?
I can. Can you guys hear me?
Yes.
I'm having
yes,
some issues
I can.
on y'all's. Okay.
No, we can hear you. We can hear you loud and clear. So,
Okay,
Nikki, my
great.
question initially, the first topic of discussion was Tesla, because it's kind of the start of the earnings season, and we are basically expecting a lot of earning reports. I think more for Tesla, we saw a major reaction on the earnings. We saw that their overall revenue was down to 25.17 billion, with expected to be 25.87. Sorry, 25.17 to 25.87, and earnings per share was also down. Even though their gross margin was down to 17.6%, which was expected to be 18.1% estimates. How do you see Tesla as a long-term investor? Because I know you are. So, by the way, guys, Nikki, if you can introduce yourself to the listeners as well, because that would be great, and they know what they get from your Twitter as well.
Sure. I'm a little bit of a jack of all trades. I started as a retail stock and futures trader. So I really understand the mindset of a trader here, but I also transitioned into my role as a certified financial planner. So I basically, have knowledge across the board on finance. Investing is kind of my core competency, but that's my passion, is investing and trading and investor psychology and trader psychology. So I kind of touch all spectrums. I pay a lot of attention to macro. I'm big into technical and fundamental analysis both. I like that's my strategy, is using both together. I'm definitely not a one maximalist type of strategy person. So that's a little bit about me. Tesla has always been in the too hard pile for me. I have kind of let it go. I've had joy of missing out on Tesla, so I'm probably a bad person to ask if anyone in here is a Tesla bull, but I've had my doubts, and I still continue to have my doubts about the wave of electric vehicles, particularly that are just not, they have range fears. They don't, we do a lot of in the US traveling across country, long distance travel. So I think that if you're living in a city, it's worked for, Austin, San Francisco, other major cities, that's worked fine. But for those people that do a lot of commuting, I know for me personally, I have not wanted to purchase an EV. I don't want to be forced to purchase an EV anytime soon personally. So I think that that's going to be a challenge, changing behavior. The other thing that I think is also a challenge with the EV revolution, and to say the least, I've spent a lot of time in polluted cities around the world. So I definitely think something needs to be done here. But when you go to other countries, especially emerging countries, you realize how much electric vehicles are just such a crazy luxury for these countries. And we're talking big cities, countries with billions of people. It's going to be really hard to really have this movement happen in those emerging markets, because people just can't afford it. So until it's more affordable, and until that range issue gets fixed, I think that EVs are going to kind of struggle, particularly in the US. I think people are starting to adopt, but it's slowing down. It's not happening at the rate that it needs to for the, all cars being EVs by 2030 or whatever the goal was that I think it was California had. And now we're looking at people in California facing higher oil prices or higher gas prices because of some of these regulations. So at what point are things gonna, kind of normalize and get back to where we accept that we have to continue to have clean energy, and we have to continue to try to reduce pollution and all of that. But at the same time, oil is just so essential and needed and used. And I just think that it's a pipe dream, some of these year goals of not selling any more combustion engine vehicles. I think it's going to be a challenge. So that's my opinion. Not a popular one.
Well,
But
so I'm going to take a small point out of what Nikki you just said, emerging markets and the usage of electric cars in emerging markets. Now, during this whole call, a lot of significance was given on Tesla reducing the price of electric vehicles. Like they're working on cheaper electric vehicles. And we know that obviously China is the largest consumer of electric cars in regards of total number of cars, then comes US, and then a lot of other countries. But we have also seen the growth of India as a car consumer in regards of new car sales. So in 2022, India was the largest, most significant increase in car sales. So there was a total of 4.37 million units of cars sold in 2022. That was an increase of 24% year on year. Now, I went to India in December, and obviously you guys haven't been there, or it's been might have been a while the last time we visited. But I was surprised to see the infrastructure for electric vehicles in India right now. It's amazing. Like it's mind blowing that I was like, everywhere there are chargers, everywhere you have availability, and it's not just like one charger, 20 chargers. Now, if Tesla can get a cheaper electric vehicle into the market, if Tesla is able to tap into the Indian market with that vehicle, do you think that gives them enough sales, or that gives them enough fuel to be able to really say that, okay, this is we are the leading brand in this industry and nobody can beat us? Tone, we can start with you.
Yeah, I want to comment on that real quick, and it's great that Joe has his hand up for a comment. So I don't see Tesla taking over the Indian market. China is going to completely dominate the Indian market because of the BRICS, because of the cooperation. I know India and China have their little border dispute that hopefully they can resolve soon. But I think the cooperation with Russia, China, India, Brazil, they don't really want to work with U.S. companies that much. They don't want to depend on U.S. companies. Now, Elon Musk is a little bit different, but I think China will try to dominate that market. I think China can provide a cheaper electric vehicle. I think China can provide like a better supply chain to India since they are neighbors. I just think that it would be very hard for an American company to dominate that Indian market. And China will be looking to do that. I mean, Russia is now full of Chinese cars. I'm seeing Chinese cars here in Panama, which is weird because, like, when I call an Uber and I'm like, what car is picking me up? And then a car is pulling up. I've never seen this before. They just look, they look similar to other cars, but like the emblem is different. And I've been in some of these Chinese cars. They're actually pretty good and they're not expensive at all. So I just think it's going to be very difficult for Tesla to crack that market.
Yeah, so you don't have to take either my or Tone or Nikki's words for it. Look at Elon Musk. He gave an interview for CNBC just recently, and he said unless significant trade barriers were positioned, that the Chinese competitors, NIO and BYD, will demolish the competition outside of China. They will crush the space because what I think you have to understand, if you're just forget Tesla for a moment, just think of EVs in general, is the amount of government subsidies globally that are going to be thrown at EVs. Whether you like it or hate it, it doesn't matter. It's just the reality of it. You're talking trillions of dollars, trillions with a T, over the next 10 years. So, if you don't think that that's going to spread like wildfire, and then the real question is, to what extent can Tesla compete? That's why Elon is, basically lobbying the government, and he will continue to lobby whatever administration gets in next for continued EV support. So, not necessarily a bet I want to take against them. Now, Tesla specifically, what I think that, and I alluded to this earlier, whoever said this, it's exactly right. They need to be competitive from a cost standpoint. Tesla is viewed mostly as a luxury car as opposed to an economy car, and I think they're trying to make that transition with their price cuts across the board and slashing prices by nearly 30% over the last year. So that's the question. Can they pivot from more of the luxury end to more of an economy vehicle, and that is problematic, I think, in the United States because for whatever reason, I think psychologically a lot of Americans view Teslas more as a high-end good, which is good or bad, depending on your perspective.
Yeah, I didn't even know that, and that was just my common sense assumption that China would completely dominate that market. I mean, Elon would have to move the majority of his operation into like Vietnam, for example, or Bangladesh to make the cars. So, or India itself to make the cars. I mean, you can't be making these cars in the West and then trying to sell them to India. That's never going to work.
Well, and you got to factor in crash standards too, which are completely different in countries. The U.S. has one of the toughest.
All right. So that was Tesla. As you said, Joe, we are expecting a lot more earnings coming out this week. What are your expectations from the markets? We are sitting at all-time highs. We are in a very, very good position. Obviously, like once you have broken all-time high, there's no resistance overhead. The easiest path is the top side. You basically go towards the upside. But what are you expecting from the market in the coming week? Joe or Tone, anybody can go
so
take this.
I'll go really quick. So, I mean, you've seen this trend of companies doing one of two things over the last, basically since COVID. They're either guiding down to where it's almost, a foregone conclusion that they're going to meet or beat earnings. They've sort of conservatively adjusted earnings and primed the market, almost like the Fed, right? To where it's like basically a foregone conclusion. That's the first trend. Or you see some of the companies, not the mega caps, but many of the companies just removing guidance or removing portions of the guidance. Like, Apple's done to this thing where they're no longer telling you how many specific devices have been sold and things to sort of soften the blunt of the obvious deceleration in growth of some of their sales. So like to me, like I don't really think the earnings. I mean, you might see volatility in the short term, but I don't think they disrupt the fundamental picture. I'm far more focused on what the Treasury is going to do. That is going to be probably the most important. I think it's even bigger than the Fed, to be quite honest. I don't really care what the Fed does this week. The Treasury issuance, which, if you remember, almost to the day bottom ticked the market back in October when Janet Yellen decided to push more bills into the market over coupons. That's going to be everything for me this week. So I'm not expecting a lot from the mega cap tech. I think they're going to post solid earnings. I'll put it that way. I don't think you're going to see much of a surprise in that way. It may cause only short-term volatility, but that's not really what I'm concerned about.
Yeah, and Joe nailed it. It's all about the Treasury. I have always, for as long as I've been doing videos, Treasury is the printer of money, not the Fed. Everyone loves to blame the Fed for everything. I blame the Treasury for all the financial problems. I blame the Treasury, not the Fed. Not everything, but 80% of the blame should go to the Treasury. 20% of the blame should go to the Fed. Now, the Fed occasionally actually does things that help the market. The Treasury doesn't ever do that. It is not their job. The Treasury's job is to print more money, and they can never live within a government budget, except they got lucky for a few years under Clinton, thanks to the dot-com boom. The Treasury only creates, it feeds the beast, which is the spending of the U.S. government. That's all that the Treasury does. Now, the Fed tries to stabilize the market. Now, we can debate whether stabilizing the market is good or bad, but at least they're trying to do something good. The Treasury does not. Yeah.
The Treasury, Tone, is absolutely juicing the market. There is no doubt in my mind that their decision to run 10% above historical norms with respect to bill issuance is juicing the market. It's not even a question.
And the U.S. government has done an amazing job over the last, 20, 30 years, especially with the help of the gold bugs and libertarians, making sure everyone hates the Fed and no one mentions the Treasury. It's absolutely incredible. My hat is off to them. But yeah, so it doesn't really matter what the Fed does. I don't think they're going to lower rates. I don't expect them to lower rates at all this year. The only way I can see the lowering of rates is if they try to lock down the world again to another pandemic, or if there is a serious natural disaster. I can see the lowering of rates. More wars tend to raise interest rates, not lower them. So if you think U.S. entering a war with China or NATO against Russia or Iran, if you think a war is going to lower the interest rate, it's not. It's only going to raise the interest rate. So either a natural disaster, like a serious earthquake, a serious volcano, another Katrina, like a serious natural disaster, or some kind of a global lockdown. Because I don't think from a natural perspective, there would be a reason to lower rates. I mean, the stock market is at a new all-time high, so they can't use the stock market as an excuse. The economy is doing okay. Robots are replacing people, so a lot of people are technically still unemployed, even though the unemployment numbers look fairly good. And yeah, I just don't see it. And it's going to be business as usual.
Nikki, any take on that from the perspective of what you expect from the market in the coming week with all these numbers? Like we have job data coming out, consumer confidence data coming out, interest rate decision, manufacturing PMI data, jobs report, and then obviously 20% of the S&P 500 companies are going to be reporting their earnings. So what are you expecting in the coming week from the markets as a whole?
Well, I kind of expect the same as it is right now. I think that the market, I think that big tech earnings are probably going to be fine. Will they be like blowout, amazing numbers? I don't know. I think things will just be okay and good. I think that we could end up seeing more positive movements in some of these names than people are expecting. It's been kind of a mixed bag so far, but there have been some names that have popped on earnings, and to the market's surprise probably. But I think that the stock market still has juice left to squeeze, believe it or not, to the upside. I think that a lot of people, especially money managers, have missed out on allocating to this rally in stocks over the past, 6 to 12 months. And they're probably going to be chasing the market up here. A lot of people are probably going to be doing that, including advisors. The sentiment was just so bad for so long while the market continued to rip in everyone's face. And now we're finally starting to see people kind of turn. And what I think is going to happen is I think into earnings, we could see this market rally into the 5,000 zone and people pile in. And then that's where we'll finally see this market pull back and correct. And I've been talking about this for a long time, so I think everybody needs to be careful. Right now, the sentiment is very bullish. The price action is extraordinarily bullish. The corrections have been incredibly shallow, which all speaks to bullish sentiment, right? So a lot of people are like, oh, well, I got to get in. I got to get these returns. This market is just unstoppable. That's when we need to start to stop and think about it and be aware. So I think going into earnings season, we could see that the market continue to rally. We could see tech earnings be better than expected. It continues to be the safe play for people, right? Tech is kind of the safe play. Apple hasn't pulled back as much as people want it to, and as much as people want to try to short it, it's known as a safe haven for investors. So I think that trend is going to continue. But when we see if we continue to see this market rally, that's when people need to be paying attention and be ready for a possible correction. Even as the exuberance just feels strong, that's when we need to reverse it.
Yeah, that's the right point. Sell when everybody is in fear. Buy when everybody is in fear. Sell when everybody is greedy. Very well said. Joe, you have your hand up. Anything to add?
Yeah. So from my standpoint, and this is my view on it, I think if you look at last year in the price action of the equity market, it is like a 90% correlation with the activity in the bond market. If you go back to the middle of last year, where the market peaked, one of the reasons why the market had an absolute tear was because Janet Yellen was draining down the Treasury general account, and you had the debt ceiling debacle, which did not get resolved till early June. So what does that mean? That means that Janet Yellen is pumping money from the big checking account for the U.S. government into the economy, huge amounts of money in the form of stimulus, but there's no countervailing drain of liquidity from the new issuance. In other words, she doesn't have to actually replenish she can spend money without actually taking money from the private sector. Now, what changed? In June, okay, they resolved the debt ceiling, and in early July, they began issuing more and more long-dated treasuries. And what happened? You saw the 10-year go from 3.5% in June to 5% in October, and it ran all the way up, selling off hard to new cycle highs, okay, during that period. And what happened to stocks? Stocks crashed and did not find a bottom until October. It found a bottom to the day when the QRA said, we're going to continue to issue short-term paper, which from a balance sheet perspective is so much easier to absorb than 10-year, 20-year, or 30-year bonds. So it's very clear to me that the decision to run above trend with shorter term paper was a primary driver of the equity market. So what happens here? In an election year where the TGA has been completely rebuilt, in other words, filled up with liquidity, knowing that the incumbent president is trailing in many swing states, Michigan, by like 15 points, do you expect Janet Yellen, the Treasury Secretary appointed by Joe Biden, to come in and say, we're going to issue a lot of 10 and 20-year bills and push the 10-year back up close to 5%? I don't think so. I think that's a terrible bet. If you want to make it, fine. And if the Treasury, if the Treasuries stay in the 4.1, 4.15 range, or lower, or they trend lower potentially, that's very bullish for equities. There's no recession. Why would you be loading up on Treasury bills right now in the face of the economic growth? We had GDP numbers for Q4 that came out running above trend growth. We had core PCE come in at 2% for Q4, which is right in line with the Fed's target. So I do have a slight difference of opinion with Tone. I do expect at least one cut this year. I think they're going to cut simply because they're going to say mission accomplished. We brought the PCE to 2%, and we've done a great job, and the economy's gangbusters. It's just typical election year positioning. And if you don't think that Powell would rather have Joe Biden as president again versus Donald Trump, who publicly said he had the authority to fire him, and I mean, as Trump rises in the polls, I expect more and more efforts from people like Powell and others at the Fed to do whatever is can to juice markets for the remainder of the year.
That's an interesting take, Joe. I didn't really I would have thought that Powell would be happy with the Trump coming back in. I mean, Trump did appoint him, I believe.
He hates Trump.
Yeah.
He hates Trump publicly. I mean, he is, or actually privately, he's told people he hates him. I mean, he literally said, I have the authority to fire you, and you should be cutting rates in 2019, 2018.
Well, he does have the ability to fire him, actually. Like, Trump's right.
The Fed disagrees with that. The Fed's own lawyer.
No, I know the Fed does, but Trump does. So I actually think the 10-year yield will rise. We bottomed at the end of December. The trend has changed. It's just gonna, break a few moving averages here. I know doing TA on interest rates is a bad idea, but I think the 10-year yield will rise a little bit, and we'll see if the Fed cuts. I think me saying that the Fed is not going to cut this year, unless there is some kind of an extreme condition, is going against the trend. Like, everyone believes that at some point this year the Fed will cut. I'm surprised that the rate isn't closer to 6 or at 6 by now. But I think it's going to stay where it is. But then again, the Fed's going to have to do something, right? Like, the Fed can't keep the rate at this rate for an entire year. They have to move it, right? Like it's literally their job. Like, if they don't change the interest rate, everyone is going to say, why are we paying these people to like sometimes it's like doing nothing and having stability is not actually good enough. You have to do something in order to justify your existence of getting a paycheck. So they are going to change the interest rate just because they're going to be bored, basically. And which direction it's going to be, I don't know.
It's not because they're bored. It's because it's supposed to match R star, which is the natural rate of inflation. So they have all these econometric models, and you can say they're all BS and everything. That's fine. I'm just telling you, they have these models that say you're supposed to have an interest rate that is at R star, unless you want a restrictive interest rate. So when they say, you may hear in Fed speak, they say, has policy become sufficiently restrictive? That's their favorite language. What that means is that they have their overnight rate above the natural rate, which they calculate. And they do believe that it is sufficiently restrictive. So in the times where you end hiking cycles, what they typically do, Tone, is they move it from restrictive to in line with R star, which is the natural rate. It's not accommodative. Accommodative was where you're juicing it, right? But if you got core PCE at 2%, how the heck do you have Fed funds at 5%? That makes no sense. That's completely backwards.
Not really. I don't see a problem with that. I mean, this was the case, 20 years ago, 15 years ago. I remember real well when interest rates were 5-6% because I was buying my first property. Unfortunately,
yeah, but our star was at 5%. I mean, that we're not running anywhere near as productive an economy as back then. I mean, interest rates are supposed to reflect productivity growth. Like, I know that's all kind of BS these days, but that's like, if you go to study economics, they'll say your interest rate is supposed to be your growth rate.
Yeah, you're right. The growth rate is significantly lower now. But again, to me, I think that the Fed rate follows the bond rate, like the free market bond rate. And the free market bond rate did fall to just under 4%, which probably justified them lowering the rate. But if the 10-year rate now rises to say 4.5 and higher, I can't see them lowering the rate. To me, the Fed is a follower, not a leader. So if the free market 10-year yield drops back down below 4% later this year, then I can see Fed lowering the rate. But if the 10-year free market rate that the world is willing to pay for U.S. government bonds, and that is grossly skewed by domestic, what's the right word I'm looking for here? Domestic coercion for, say, pension funds to buy more government bonds and other entities to buy more government bonds because China ain't buying, Russia ain't buying. I don't think India's buying. So who the hell's buying American government bonds? Well, Japan, which has actually a negative interest rate, if you can believe that, which is insane, and Europe. But the money in Japan and Europe to buy U.S. government bonds is actually running kind of low. So who's left holding the bag of U.S. government bonds? And it's internal U.S. institutions like pension funds, retirement funds, and all the other stuff. Anyway, I'm gonna leave it there. We should probably move on to Bitcoin.
Yes, let's move on to Bitcoin. I had one more question, but I'm going to ask that later on. So let's go on to a little bit about cryptocurrency. So I want to keep Bitcoin for end tone because I want to end it on a high note. But let's start off with Binance first, okay? So Binance right now has basically acquired the #1 spot in the overall market in regards of open interest. Right now, Binance has an open interest of 104K BTC, and CME is the only one which is higher, which is sitting at around 110K BTC. With all these problems that we are seeing with Binance and still authoritative place in the market, what are you basically looking at Binance kind of becoming the exchange which will basically in future take over the Coinbases and all others in regards of Bitcoin or even in regards of crypto as a asset? Joe, if you can go first. I'm trying to add tone again.
Sorry, couldn't unmute. I was having trouble. So I don't. I still think that there are far too many people sleeping on this issue of the monitor, which is getting in there and basically will have my friend John Reed Stark says, he used the term forensic colonoscopy of Binance's books starting, I think, April 4th now. Is that the date the court said? The independent monitor is going to have full access and basically be a direct channel of the U.S. government. So, I mean, listen, I don't think Binance is going under. I don't think it's going to disappear by any means. Let me just state that at the outset. But the amount of oversight and insight that monitor will have into Binance's operations, to me, would be a huge disincentive for anyone, even law-abiding citizens, to want to trade on Binance's platform. And let me explain why. So if you are a trader of significant size, and let's say you're not doing anything illegal, you're trying in good faith to completely observe all laws of your particular jurisdiction, why would you trade on a platform that basically has an open books agreement with the United States government? Why would you trade on a platform that is providing information in real time to U.S. regulators? Now, Coinbase, for example, it's a publicly traded company, right? They're being sued by the SEC. They're fighting the SEC in court. They have effectively consent decrees with the IRS to provide certain levels of information. But even Coinbase does not have a monitor in there watching every single trade and every single transaction 24/7, 365. To me, like, if you're a smart person, the level of risk that is posed by something like that, constant monitoring, is a huge disincentive for putting big amounts of capital on Binance's platform. Now, this hasn't started yet, right? It will start, in a couple months here, and things will begin to change over at Binance's operation. They may, find out where additional bodies are buried, additional issues that may come up. But again, I don't expect it to be fatal to the company. I think the company will endure, but I do expect a significantly decreased market share moving forward, given the level of scrutiny they're going to face and what they struck in their deal with to avoid further criminal prosecution.
That's super interesting, Joe. By the way, is my audio a little bit better now? I put on headphones, so I'm using a.
Oh, this is very good. Yes, this is perfect.
Put on a headset. So that's interesting, right? Because I was going to go in the opposite direction. Now, I agree with Joe that why the hell would anyone really want to trade on Binance? But for the opposite reasons. I actually went the other way. Like, if you are a fully regulated, legit business,
why would you trust Binance? I mean, they've had so much speculation on them. Like, I personally hate Coinbase because I think they are bad actors for Bitcoin, but I trust them as a business entity a lot more than I trust Binance. I still believe CZ can just take all the Bitcoin and run away and disappear. Like, I would never trust it. And I never trusted that they had a standalone U.S. entity, and the U.S. government eventually came out and saying you never really had a standalone U.S. entity; it was all commingled. I don't. I think the SEC still hates the fact that there is a Binance coin, which for anyone that's not totally, deaf, blind, or I'm not going to say the S word here, doesn't believe that it's an unlicensed, unregistered security. So I just don't see it. I don't see how any serious business would want to use Binance. It is more for the non-American that is not worried about American tax authority, that doesn't have any tax reporting to anyone, that doesn't care if they do KYC or not, or they don't and they trade anonymously. I'm not sure if you can still trade anonymously on Binance. I don't know. I've never used it. I don't know much about it. But to me,
You
it
can't.
feels
You
like
can't.
you can't.
You.
Okay.
Yeah.
So to me, I'm not sure who really wants to use it. It's basically non-American entities that don't care about American oversight of them. It's kind of like my view of what's the safest, most secure messaging platform to use if you want to text your friends. And my, I guess, counterintuitive answer is WeChat. And the reason my answer is WeChat is because I have nothing to do with China. I don't talk about China. And if I'm talking to my friends and I know I'm going to talk about the US and I don't want the US snooping on my stuff because I'm talking about the US. So using a Chinese platform where all those messages are monitored by China, I couldn't care less, right? So that becomes your safest place to talk privately with people, like an adversary of the one that's reading every message you have. Like, I don't trust Signal at all. Anyone tells me that Signal is a safe and secure messaging platform, like, no, I believe that US government reads every single Signal message you send, every single like Google message you send. Telegram sits somewhere in between, but that's kind of my view on it. So I don't think any American entity would be using a Binance, and I don't think any Chinese entity would really want to use Binance either. But those in between people that have nothing to do with the U.S., they don't care if the U.S. sees their stuff. But it's
Anything to
still
add,
not
Joe?
good.
And
But Joe made a really good argument.
yeah, 100%. Like both arguments were correct in my opinion, even though bi-directional, completely opposite, but correct. So, Nikki, I want to get to ask you something about, since I want to start the ETF chatter right now. We all know you are a CFP. You look at all these things, how the personal finance investment should be, how people should look at all their money. ETFs in the Bitcoin space, as a CFP, what are you suggesting your clientele, or what are you thinking? How are you looking at them?
Yeah, I guess to kind of piggyback off of what you guys were just discussing on the Binance versus Coinbase trust scale, it's very clear on the Bitcoin ETF side, Coinbase has been winning as far as a custodian and trust for these huge firms like BlackRock. So I think that is important to note, that they're kind of winning on that side of things. But as far as the Bitcoin ETF side of things go, I think it's an exciting time for Bitcoin and crypto in general, but specifically Bitcoin, the true decentralized cryptocurrency, right? So I think that this is going to give so much opportunity right now in the US to have crypto in your portfolio. It has to be in a taxable account unless you go through the trouble of doing a self-directed IRA and going that route. But generally now we have so many different ETFs that give people accessibility into tax deferred or tax advantage growth. One, we have to remember that Bitcoin has been the most volatile and best performing asset class over the many recent years, right? So with that volatility comes larger returns versus other assets. And one of the best things about, the traditional versus Roth, or the tax deferred versus tax advantaged, is that we can take advantage of these large returns in those types of accounts. So even though, yes, you're not, not my keys, not my coin situation that everybody talks about, it's a different way to basically tax strategize and be able to tax locate properly. So I think it's pretty cool. I'm excited about it. I know other advisors have already started putting it in client portfolios. People have wanted this, so it's about time.
Continuing on that, and I want we have been having a little bit of chat, Nikki, on the messenger, and I basically asked you it would be a great idea if you can do it, because I know you will be doing your own research and you will be basically trying to find the best one among them. I know it's still too early, but which one has been your favorite till date?
Well, I hate to say it, but the BlackRock Bitcoin ETF is the one that I'm personally going to be allocating to in my own portfolio. So I think even by assets under management, they've been winning on that one. I'd have to confirm that, but that's the one that I'm got zoned in on, is the BlackRock Bitcoin ETF personally.
Well,
I
there we
want to
have it.
comment. I want to
I had a
comment on
question
that
for
as
you.
well.
Yeah, go on.
Wait, can you guys hear me? Okay.
Yes, we can. Yes, we
So,
can.
Nikki, you are right. BlackRock is ahead with assets under management, and it is also the most liquid one, which matters to me. On average, it's been trading just under 18 million shares per day versus the second best, which is Fidelity, which is trading 10 million shares per day. They are both head and shoulders above the rest. The next two most liquid ones are Bitwise and ARK, and they're down below 3 million shares per day. Now, to me, the average trade volume is important. Now, the Fidelity ETF is actually at a higher price. It's at $36 versus $23 for BlackRock. So obviously, when an asset is at a higher price, it tends to have a little bit less liquidity because, again, it requires more money to circulate through it. So if you look at the traded volume, like value adjusted, BlackRock is still ahead, but not as much. So that means that the bid-ask spread in BlackRock's iShares iBit ETF will be a little bit tighter, which means less slippage. So BlackRock is a slight winner here. Now, I also already, converted my GBTC into BlackRock, but I will be switching from BlackRock over to Fidelity because so far, after 2 weeks of trading, Fidelity's ETF has proved that it's a close second behind BlackRock. And the fact that it's not BlackRock gives it some extra points. They have the same exact fee at 0.25%, which is good. But the most important factor for me is that Fidelity is self-custodying, and I hate Coinbase with a passion. So even though I will lose, a little bit on liquidity and a little bit on assets under management, I do want to support a business like Fidelity over a business like BlackRock. So give Fidelity a second look here. I will be probably next week or something when things stabilize a little bit. I'm going to convert my iBit shares to FBTC shares.
Yeah,
Everyone, this is not financial advice, by the way. This is just Tone's own lookout. Go on, Nikki.
That is
absolutely.
correct.
Yeah, I mean, look, I think that they're both trailing, pretty closely in terms of assets under management. They're both really trusted, high quality names. Either direction, I think you'll be fine.
Joe,
So,
your thoughts on
Tone,
this?
yeah,
So
I had a question for Joe, so I wanted to basically bring
yeah,
him
go
in with
ahead.
that
Go ahead.
question. Yes. So Joe, you when we had this conversation 2 weeks, I think 2 weeks or 1 week back, and you were going through the fees, and you were like, this is all marketing. But seems like the median fees, which was 0.25%, is kind of winning. Like apart from one of them, but other than that, the 0.25% fees was the right fees. And bringing your points, and let's if you have done a little bit more in depth into the fee structures and everything. Let's talk a little bit about that if you can.
Yeah, and just as an aside, okay, why I still think this is one of the best spaces on Twitter. I'll just do a plug for the show. Is that if Tone will recall, I think that we specifically talked about on these these prior spaces the issue with GBTC and the sales that had to occur. So the ETF gurus on Twitter that didn't see the massive sales of GBTC coming to close the discount, I don't know what you were thinking. I thought this was just common knowledge that people just understood the amount of GBTC that's going to have to be sold when these things came to market. But I'll just a plug for this program on that, because I remember talking about this specifically with Tone and how that's how you close the discount. But sorry, your question was about the fees, and you've seen basically a year and a half of fee war that's gone on over the last month or so with these fees. Even before they're launching, they were cutting them intraday. They would announce the initial fee, then they would see their competitors, then they would cut them again. And several of the ETFs have promotional fees where they're basically, for the first 6 months, they're paying nothing, they're paying zero. There was rumblings coming out about how Schwab loves to come into the ETF game after the fact, and they want to launch and do one for 10 bips. So, I think James Safart was talking about that, which is very interesting. Schwab comes to the market and undercuts everybody. But you gotta understand, even for an ETF, 25 bips is nothing. I mean, that is rock bottom pricing at the get-go that you can get Bitcoin for. That is cheaper than executing a few trades, or I think one trade on Coinbase of size for spot Bitcoin. So they're providing all the custody, taking care of everything. It's in your brokerage account, or your tax preferred accounts, and that you don't have to worry about the tax element of it. I mean, what an unbelievable deal for a lot of retail investors who don't want to mess with Coinbase. And I'll just say, obviously, if you're in the ETF game, the most important thing is you want to pick one of the top 2 or 3 winners. You don't necessarily need to pick the winner, but the ETF game pretty much works where it's winner take most. There aren't a million different ETFs that track the same indice. In a lot of others, there's usually top 2 or 3. For example, QQQ dominates the Nasdaq 100 ETF, although there are other products that have nowhere near the liquidity and volume that QQQ does. And that's really important if you execute like options-based strategies. You want to have a very liquid product. So to me, you got to remember that the options chains are going to be launching probably in about a month or so here now is the best estimate they can give you to the market. Because it was under a 19B, they have to go through that whole process again, and they don't really have a good basis for denying it but so I expect the SEC to eventually approve and greenlight the options. So you really want to be in a vehicle that is going to capture a lot of volume and liquidity, and I think that what Nikki and Tone says is exactly right. I mean, I think it's pretty much a done deal at this point. You're going to get the top 3. The real question in my mind remains GBTC. Which I think is fascinating given their still dominance in terms of their holdings. What can they do, to sort of stem the bleeding? There's been some speculation I've heard through channels that GBTC may spin off another entity with a much lower, more competitive cost structure. Keep in mind, they own the ticker BTC. That's why no one has taken that ticker. It would be pretty interesting if they spun off, a cheaper product, say 35 bips or 40 bips, and they could push customers towards that. And that's not uncommon. You got to look at like Invesco, for example. Invesco has QQQ, which is their legacy, Nasdaq 100, but they also launch QQQ M, which is the exact same vehicle for cheaper costs for long-term holders by the same company, right? They're effectively cannibalizing their own operation. That's part of the ETF game. So I would not be surprised if you see something like that maybe in the next couple months here, once they stem the bleeding, the launch of another grayscale Bitcoin spot ETF that does not have the baggage and maybe some of the sort of negative history as GBTC. It might be smart. So we'll see. Stay tuned on that.
So that's great insight. So Tone, I want to bring you in. So this was basically going towards grayscale, and you can add your comments as well with the question. We talked last week, when can we expect the grayscale selling to start reducing? And we have seen a net outflow getting lesser and lesser, not significantly, but it is coming down. Do you think we have seen the majority of the selling from that perspective? And can you elaborate on your point, which you wanted to add as well?
Yeah, Joe, by the way, that was probably one of the best spaces we've ever done on this channel. That was the one we did like a few days before the ETF launched, or like a week. And that completely changed even my view on GBTC. And I got out 75% of my GBTC I exited like at 3 p.m. before the announcement came, and I got out of GBTC right at the top. I sold almost all. I regret not selling all of it. I sold 75% of my GBTC position, and then I flipped the rest soon after, and I'm about to redeploy that 75% back into Bitcoin if these prices hold 43,000 middle of next week. I'm back 100% long Bitcoin. Right now, I'm just waiting for the right time to redeploy that exit. And that was the absolute perfect exit. And this space absolutely helped me identify that GBTC is not what you should be holding. Now, as far as the bleeding of GBTC, I have the numbers in front of me. The bleeding of GBTC peaked on the 18th and 19th of last week. Actually, last week, where they were selling over 14,000 Bitcoin day over day for 2 days in a row. Actually, I'm sorry, on January 22nd, after the 3-day weekend. Oh no, I'm sorry, that was the week. That was the week after that. They sold almost 16,000 Bitcoin in a single day. The last data point I have, they sold just under 10,000 Bitcoin. So even though the trajectory is down, it's still a lot of Bitcoin. They are selling more Bitcoin than the others are cumulatively buying. So all other 10 ETFs are buying less Bitcoin than GBTC is selling. I'm hoping that part has ended. Hopefully GBTC is only bleeding about 5,000 Bitcoin per day instead of 10 to 15,000 per day. I think the panic selling of GBTC is over, but people are gonna, slowly rotate out. Don't forget ARK Invest. I think ARK Invest was a big contributor to selling GBTC. Just my speculation. Even though you can check out an interview that I had with representatives from ARK Invest on the Tone Vays channel, and please check out the Financial Summit YouTube channel where we now have daily streams as well. Because ARK Invest was heavily invested in GBTC, and now they have their own ETF. So why on earth would they continue to hold GBTC? Of course, they're going to rotate into their own ETF. Why pay GBTC a 1.5% fee to your competitor when you can pay a 0.25% fee to your sub entity? Also, FTX was holding apparently a bunch of GBTC and Grayscale or the trust, and they were exiting. So I think a lot of the people that were ARK wasn't panic selling, but you could put it in the same bucket as panic selling. So I think a lot of the panic selling is over. For example, like I had already got out, but some people still haven't. So hopefully this balances out. I hope the lows that we had last week are here to stay. And in my view, if the price of Bitcoin stabilizes above $43,000, I think that's it. I think the worst from GBTC selling is over, and should be a nice bull market after that. That's kind of my Bitcoin view. Welcome, Simon Dixon, for joining us. I see Abigail Joy as well. Also, Gary Cardone. Thanks for joining us, guys. TC, Kapoor, I see you in there. Wow, recognizing a lot of names. Thanks, guys. Lisa.
Yeah, Kapoor's been sitting there for a while. I was thinking if he had any questions as well. Simon, if you are interested, do let me know. We'll be lucky to have you as a speaker as well. Tone, there is a question for you, and this came into the DM yesterday. Why did you move to Panama? Like, you expect US to break down and all that, we understand, but why Panama? That's the question. Imagine that.
That's it's an interesting question. So I think I'm going to try to keep it short. Specifically, Panama is going to be very hard to answer. I wanted to have a residency outside of the U.S. for multiple reasons. I'm not going to get into the details of it. I sleep better at night when I'm not on U.S. soil. It's just, for me, I feel safer. Even when I could potentially be in a more dangerous country from a street level perspective, I feel that I have enough street smarts not to put myself in a bad situation outdoors with criminals, even though you could get in bad trouble in LA and New York as well. But as far as, someone in a uniform knocking on my door, I feel a lot safer in a foreign country. So I like spending time in foreign countries over the United States. I mean, just by statistics alone, the United States has more people in prison than any other country in the world. So how can anyone say that the U.S. is the safest place to live? Again, I think that you want to live in a country where crime isn't rampant, but you also want to live in a country where the authorities aren't criminals either. And based on my political views, the authorities aren't exactly on my side. So my number one priority was to try to spend more time outside the United States and only spend time in the United States when I have to. That was priority one. Another priority is establishing as many residencies as possible. And just so you have options. I'm not a big fan of having 8 different passports. When you have 8 different passports, you are now subject to 8 different laws and jurisdictions. But if you have like 1 or 2 passports and say 15 residencies, you get, you get treated in that country kind of like you are a citizen of that country. So you can go in and out, and you can do everything. You don't have to worry about papers. But at the same time, you're not subject to the international laws of having that passport, and that country can't recall you. There are several issues when people have many, many passports. So I like residencies. And Panama created, Panama wasn't too far from the United States that I still go to. It's a pretty central country. I do have to go to the U.S. quite a bit every now and then. From a Latin American perspective, again, it's not too far. It's on the U.S. dollar, makes life a little bit easy. There are lots of issues with Panama. I'm not saying it's the best place, but it was kind of convenient. I came here. I met a lot of good expats, a lot of people. Met a lot of people I have things in common with. I play poker with my friends all the time. We go to like things like the sauna. Everything is walking distance or within a $3, 10-minute Uber from my apartment, unless it's during rush hour. It became a convenient place, and I kind of just quickly got my residency. And I'll always have a passport option in like 5 years. And I do plan to set up more residencies. I have a few other countries on my list, like Paraguay, Argentina, Mexico. I think Latin America is a good place. Lots of issues with definitely Eastern Europe. I'm not interested. Western Europe, I'm not interested in. Eastern Europe, I'm more interested in. But I need to see where the Russia-Ukraine conflict goes and how that ends. For a white person, getting proper residency in Asia is very challenging. You never really get accepted, and you never really can get a passport in those countries if you need it. So just Latin America became a place, and for convenience, it became Panama. When I came here, spent a bunch of time. I had friends that knew lawyers that could set my residency up quickly and cheaply, and found a good apartment. So yeah, it was good. It was good. I'm not going
Lovely.
to discuss my dating situation, but that also had a little bit of a factor in it. I just like to keep my
Um,
private life private.
we know that. We know that. By the way, guys, Tone is not one of your YouTubers who loves his Ferrari. He is a very down-to-earth guy. So if you get a chance ever to meet him, you should. And the only chance that you have, at least in the foreseeable future, is the Financial Summit. So do visit our website for that. Uh, Going ahead, Tone, I'm going to basically end this ETF topic with all three of you commenting on a very, very small thing. Google Ads. 29th of January, that is tomorrow. Google Ads, Bitcoin ETFs would be able to advertise on Google Ads. Now, Google is one of the biggest platforms that is there. And a lot of people, everyone, I think, visits it at least once a day. What impact do you think it would have on the inflows on the Bitcoin ETF? And if so, how bullish is this for Bitcoin as it is?
I'm sorry, can you just repeat that? Google is allowing what, Bitcoin ETF
So
ads or
Bitcoin
Bitcoin ads in
ETF, yes.
general?
No, Bitcoin ads in general. Now Bitcoin ads can run on Google. Until now, they were blocked.
Interesting. Okay. I'll let somebody else comment on that first. I'd have to think about it.
Joe or Nikki, anyone?
I'm happy to go first.
Yeah, Nikki, go ahead.
Yeah. I think you guys would be surprised how many people are just completely unaware of certain things in finance and investing. So I actually think that if Bitcoin ETFs could put out ads, I mean, it would at least spark some interest. Is it going to be like mind-blowingly impactful on Bitcoin's price? Probably not. But will it help adoption come along? Probably. I just don't think it'll be, on such a huge scale because not everybody even knows what an ETF is. So they would have to really be able to target their audience very well to really make a big impact. But yeah, those are my thoughts.
Sorry, Joe, you want to go next?
Yeah, I mean, I think it's net positive. I mean, I'm far more interested to see what ends up actually materializing for the Super Bowl ads. Coinbase is running one. There's at least, supposedly going to be other Bitcoin or quote unquote crypto type ads. I think that in terms of mainstream is always sort of obviously a big headline item. So we'll see. We'll see if we get some buzz from that.
Tone, you want to finish up this small discussion that we have? Oh, we have our friend Bitcoin Archive as well. Tone, you want to go ahead?
Look, I think it'll be a positive. Look, everyone knows what Bitcoin is now. So the ability to advertise it on Google, it's not going to make any difference in the West, but it might make a little bit more of a difference over in the emerging markets. But as far as like the US and Western Europe is concerned, everyone already knows Bitcoin. Everyone talks about it. The fact that Google Ads didn't have it, I think it's only going to lead to more scams where people are using the Bitcoin word and promoting a bunch of garbage. So I think it's a bit of a double-edged sword.
Very well.
Everyone may know about Bitcoin, but there still is a lack of people knowing about the spot ETFs. I was playing in a poker game with some relatively well-off folks last night, and not a single one of them had heard about the Bitcoin ETFs launch that they could buy it in their brokerage account, which I thought was fascinating.
Exactly, Joe. It happened with me yesterday as well. So day before yesterday, I was at an event, a small gathering of basically kind of a wedding, and there were a lot of people. So I started talking about Bitcoin, and trust me, there was like 12 people sitting next to me just listening about Bitcoin because they did not know what Bitcoin is. They did not know what a wallet is, and they did not know how to buy Bitcoin. And then I'm starting to talk, and they're like, "Oh, if we forget the keys, what next?" And then I'm like, "Oh, there are ETFs. You can do that if you are more scared about these things." And they did not know anything about it. So I am very much bullish myself after going through that whole event and trying to see, like, for 2 hours, these people were sitting there listening to me about Bitcoin, what Bitcoin really is, and how they can acquire some. So I'm very, very bullish with this specific Google ad thing because a lot of people will get to see what Bitcoin ETFs are and how they can acquire some. So moving on, guys. Let's
Hey,
move on.
Vish, one second. Can you make me a co-host or maybe try to
Yeah,
bring up
sure.
Brad Mills as well?
Yeah,
Brad
yeah,
Mills is someone
100%.
I've known in this space for a long time. He wanted to, uh, Brad wanted to say a few things about the Google Ads thing. He probably has some
And
experience
my
with
friend
that.
Gary, bring him up too, please.
Cool. So by till the time these guys are coming up, so there's a comment in our comment section saying that Tone knows everything about everything. So guys, if you go through Twitter, like Tone, Joe, Nikki, and a lot of our speakers, they invest a lot of time in a lot of research, and they just don't do it for themselves. They do it to educate everyone else, right? The things that they say at times initially might sound, oh, they know everything, but if you start researching through their comments, you'll find that a lot of other people have said the same. For example, Joe and Tone basically said it last week that they want to see decline in the GBTC selling, and it started to decline. Would you imagine Jamie Dimon came out on Friday and said the same thing, that GBTC selling is now at its peak, it's going to start falling down, and the sell off is not going to continue. Other than that, Tone and Joe were very critical about how when the Bitcoin ETF will be approved. What happened? We followed a similar path because these guys have invested a lot of time. So when we get a chance to listen to them, trust me, I have learned it myself. It's amazing. So carrying on, sorry, sorry to do that, Tone. I just wanted to let people know how fortunate we are to basically be able to hear to all of our speakers and share their knowledge and basically getting it for free. So it's really really amazing. Archie, you want to step in? Brad, do you wanna? You have
Brad, get in
Oh,
here.
hey. Yeah, sorry. Can I ask you a question first? You said that the Bitcoin ETFs were allowed to start advertising coming up here. What was it? On Monday. But
tomorrow,
is it
29th of
is it
January.
So is it just Bitcoin ETFs, or is it all cryptocurrencies are now allowed
No,
to
just
advertise?
Bitcoin. It's just going to be Bitcoin. No other cryptocurrencies allowed. So it's just for Bitcoin and Bitcoin ETFs.
Is there a way that I could see, like, a source on that? Just
Yes, I can
curious.
share you the source. To be honest, it's available on Google. If you search for Google approves Bitcoin ETF ads or Bitcoin ads, you will find it. It's Google's own privacy policy and their advertisement policy that's been updated.
Okay. Yeah,
Yeah.
I just wanted to say, I guess, not a
I
lot of
think
people.
Financial Summit tweeted this morning. If I'm not wrong, we did tweet out this thing this morning. So I'll share the link in the nest so you can continue. You can carry on.
Yeah, it's just something that I was following because I came from the affiliate marketing space, in the Facebook game business days back in 2009, 10. And I worked with a lot of affiliate marketers, and I remember following these guys in these mastermind groups and all this stuff that they would have where their highest earners would be kind of in Facebook groups and stuff together promoting each other's stuff. They all started shilling ICOs in 2017. They started making insane money on ICO ads in 2017. And if you were around in the space, you probably remember being followed around the internet constantly, like being shown James Altucher pictures. Remember that guy with the crazy fro, the crazy hair, and he's like, "I predicted Bitcoin at $100. Here's what's next." That group of people went so crazy advertising on social media that I think that was one of the primary drivers of the 2017 ICO bubble. And if you look at when Instagram, Google, Facebook, and um, Twitter banned crypto ads, it was January 2018. So pretty much unilaterally, they all banned crypto advertising right at the peak of the last, that last cycle's top. And of course, there was other things that happened as well. Just structurally, the market was overheated and everything. But you can almost point to that moment as the top. And then fast forward to this next cycle, you had TikTok advertisers were driving a lot of people into DeFi and meme coins and NFTs. And in July 2021, TikTok revised their advertising and their branded policies to ban financial cryptocurrency related ads and branded channels to sponsor to get people into these things. And that was pretty much near the top of the NFT bubble and the meme coin bubble and all this stuff. So I think that people don't really look at it from that perspective of these marketers that are elite level affiliate marketers, elite level performance ad marketers. They spend hundreds of millions of dollars because it's a numbers game to them. If they can make $2, $3, whatever it is on a customer, they'll just maximize their possible as much as they possibly can and just make money. So whatever is available to make money with advertising for these affiliate marketers, they will do it and they'll maximize it and it'll be very successful. So if you're saying that it's only Bitcoin ETFs that are now being approved, I think that's going to be extremely bullish. You're probably going to start seeing ads just like, if they're profitable, and I don't see why they wouldn't be. And I don't see why these
So
ETF
the
companies wouldn't have huge
Okay,
budgets to
okay.
spend on
no,
this.
Just to
it's
clarify.
cryptocurrency trust. It's so in the document, and it has been shared by one of our listeners, Bitcoin Archive, a good friend whom I had the pleasure to see. He has shared it on his account. I have put it in the nest that it will be approved. It was 3-day old tweet, but it's 29th of Jan, and it's cryptocurrency trust. So it's not just Bitcoin ETF. It most likely will be Ethereum as well. So any ETFs that are approved in the future.
Well, no,
Joe,
any trusts. Okay, it's the language is going
any
to be
trust, any trust.
trust, right?
Yeah.
So for example, by the way, this in my view, and I'm not, if you know me, I'm not a big conspiracy type guy, but I'll just tell you, this is a direct response to BlackRock's 7% ownership in Google, right? Like this is so obvious to me that they don't want every cryptocurrency scam in the world to be promoted with Google ads. They want to be able to promote the various ETFs that have launched, and they want to have flexibility so they don't have to go back and revise it because BlackRock believes the ETF, the Ethereum ETF will eventually launch as well. That's why they already have that spot application in, and they estimate it's going to be approved. So this is solely in response to big money players who want to have the ability to promote these products on Google. There were definitely very simple phone calls that are being made by folks that have seats on the board at Alphabet to get that. So to me, that's just it's obvious.
Well, thank you. Simon, how are you doing? It's been a few weeks. We haven't had a chat. Any insight on anything that we have talked about till now from your side?
Yeah, I was just going to say, so the GBTC sell-off, obviously been following a lot of the bankruptcies. So the FTX at $1 billion, they're out of that position now. That's complete. I know Three Arrows Capital had a sizable position. I can't remember offhand. BlockFi, Celsius had a smaller position. So all of the bankruptcies just want to get out immediately when they can get liquidity. Then you've got the people that maybe bought higher up when they may be doing some tax strategy, and then they're going to move into another ETF. You've got, so the and then you got all the people that just want to change, switch the fees if they're doing it in a tax deferred structure. You then got to wait for the new ETF. So there's a bit of a time lag in figuring out that transition. And then there's just the people that have been, stuck in it, got on the wrong side or on the right side of the trade and of the arbitrage, and now want exit liquidity because of the ETF. So no idea how much each subsection is in which point. And obviously, Digital Currency Group or Grayscale would have done their calculations in keeping their fee high, in figuring out how many people are stuck here, and is it worth us keeping the fee like significantly higher than everybody else, because we know that some people are going to be stuck for tax reasons and it's going to be sticky. They would have done that calculation, so I'm not sure how much more outflows they're expecting. But it could be a little while. We've got to wait for it to all normalize, which creates I think that creates a decent dip. And then Google Ads, that's pretty interesting. I think if there is, I don't know whether these ETF providers have affiliate relationships. I think the regulations are pretty tight on that on financial products, but I think you have to be a registered broker to be an affiliate of a financial product, particularly if it's a share of a Bitcoin ETF. So that probably fits within the regulatory side. And then they're pretty used to having adverts where you've got to have all the disclaimers and everything that will be there. So I wouldn't anticipate much scammy stuff when selling shares in Bitcoin ETFs relative to, the crypto ICO type advertising thing, because that's a pretty dangerous game if you're engaging in promoting a very clear security and you're not registered to do that. Then I think Google will have a pretty tight approval process for those that can take those types of ads. But I think they'll come through. Someone will have a business opportunity in that.
Cool. So moving on, basically, I wanted to talk about Silk Road, the selling of 130 million worth of Bitcoin that's going to happen. But then I realized that after GBTC sell-off in the last few days, 130 million doesn't even sound like anything anymore. But still, Tone, what's your view on this Silk Road 130 million BTC selling?
Oh, sorry. Well, wasn't on mute. I was replying to messages. So it's irrelevant. It's a small amount. I mean, GBTC has been selling for the last 2 weeks. They've been selling over 10,000 Bitcoin a day. The Silk Road selling is just 3,000 Bitcoin. It is irrelevant. Now, according to some data, the U.S. government has 120,000 Bitcoin or something. If they decided to sell, say, 25% of that in one shot, that would be significant. but selling 3,000 Bitcoin is not. It's meaningless.
I
Joe?
think they just needed some pocket change. Go on, Joe.
Yeah, I think this is like the key here to think people should need to focus on. The market is absorbing billions of dollars of Bitcoin sales over the last, however many days it's been since the ETF started trading, and you've seen, movement in the price, no doubt, but that's really bullish, right? That we can absorb that kind of liquidity coming to the market in short-term frictional sales.
No, look,
Oh, 100%.
I'm all for governments, like hostile governments to Bitcoin, like the U.S. government, contrary to Joe's opinion on this. The U.S. government, Chinese government, these governments hold a lot of Bitcoin. I'm skeptical on how much Ukrainian government's holding. I don't think they're holding any. But like a government like El Salvador is pro Bitcoin. A government like U.S. is anti Bitcoin, in my view. So yes, I would want them to sell that 120,000 Bitcoin sooner than later. They sold 400,000 Bitcoin that they confiscated from Silk Road the first time back in 2013. They sold all that off, 400,000 Bitcoin. They sold it back in like 2016, 17, something like that, right? So, I don't want the US government holding 120,000 Bitcoin when Bitcoin is over $1 million. I'd rather, rip the Band-Aid, have a market sell the damn thing. I don't care if Bitcoin goes down on their sales, as long as the US government doesn't get the profit from Bitcoin into the future.
Sell it now to us, and then we can enjoy it instead of the US government. Go on, Simon.
Yeah, agreed. Distribute the supply. The DOJ is one of the largest holders of Bitcoin. For those of you that don't know, it's a fascinating story how they got the second set of 50,000 Silk Road Bitcoin.
Is that Asian guy from Berkeley?
Yeah, Jimmy Zong. So
Right.
he went away, came back, and his house had been broken into. And someone stole one of his Trezor wallets or something with $400,000 worth of Bitcoin on it. And
No, it wasn't worth a Bitcoin. No, it was it was actually
cash,
400,000 in cash. It was
Yeah.
Someone stole 400,000 in cash from his house, even though he was sitting on like $1 billion in Bitcoin, and he complained too much to the government, and then they started investigating him.
Yeah, the feds became really friendly, and they filmed the whole thing. So there's GoPro type footage on documentaries and stuff, and they managed to get him to open up his laptop and show the Bitcoin, and then he started showing his Bitcoin, and they managed to get him with 50,000 Bitcoin that he got from Silk Road, and that's a fascinating story. It's crazy. So he literally ratted on himself.
Right. No, and there's so many lessons there, right? Like when you if you're living in like a little house that's worth $100,000, well, though it was Berkeley, so it was worth 100,000 like in normal parts of the country. If you're living in like a modest house and you don't really have a job, and then you call the police to say someone broke into your house and stole 400,000 in cash, the cops are going to start asking, why was there 400,000 in cash in your house? And then when you answer them, I invested in a lot of Bitcoin back in the day. They start to ask you more questions, and then you start opening up your hardware wallets to show them how Bitcoin works. That tends to lead to disasters.
Yeah, it's some good Sunday watching. Just put in YouTube's Jimmy Zong Silk Road Bitcoin. It's a good story. Yeah. So we got to. I think Joe's right. There's a lot of Bitcoin hitting the market right now, and the market's just lapping it up. So we got the Mount Gox, and there was the Mount Gox double spend. Did you see that one, Tone?
Oh yeah,
I did not. What's going on with Mount Gox?
They used they used PayPal as the distribution partner, and so PayPal the trustee gave double balances to everybody. So they basically had a double spend, and some people withdrew it. And then the trustee reached out to all of the people that withdrew the double spend and said, can you send it back, and demanded it back. And people were replying saying, as long as you complete KYC with me and you're willing to wait 10 years, and then I might send it back after 10 years. So it's quite funny.
Well,
So they've got to figure out what to do with that.
that actually is funny, but but based on what you just said, I don't think you mean double spend the way I'm thinking of double spend. Did they like double the bit? Did they send the Bitcoin twice to somebody?
No,
Like
they
a
just
double spend is usually when you send it to someone, then you take it away from them by double spending it and like having the other transaction mine faster.
Yeah, I don't mean a 51% attack double spend. I mean a centralized database PayPal double spend. They sent the Excel spreadsheet and they put double the amount of Bitcoin on people's balances. And
Oh,
then so
okay. They
obviously
they
that
paid they
dilutes
paid
everyone
people
else.
they paid people double basically.
Yeah. It's
Why are we
hilarious.
not
But
lucky like that?
that's
We
got
are
to
never
dilute.
lucky.
So either they got to come up with that, or that's going to have to dilute all the other creditors. That gives them a really good case. I mean, that's gross negligence. I mean, you can't dilute
Well,
all the other creditors.
what kind of balances are we talking about here? Like how many people and how much Bitcoin?
Yeah, I haven't actually seen the details. I don't think they've told us, but they got to figure that one out. It's a funny story.
Well, okay, so they're gonna get it back. Well, like Joe's the lawyer here, right? But everyone that got the Bitcoin, right, was KYC'd. So, for example, if a bank accidentally sends you $100,000 check when they meant to send you a $1,000 check, you could, play around and you withdrew the money. You can play around and be cute and try to make your point. But if this playing around lasts a few months, the bank's gonna get pissed and they can get you arrested, right? Like they know who they send the extra Bitcoin to. They can be cute for a few months, but eventually they're gonna get like a real like subpoena in the mail, forcing them to give the money back because otherwise they'll be criminally charged for stealing money. So they are gonna get it all back.
Yeah, you're right. I mean, it's a bit like the clawbacks and the bankruptcy. So if you withdrew money 90 days prior to any of the Chapter 11 bankruptcies in crypto companies, people are able to settle. And then if you don't settle, then yeah, literally they'll just come after you
Right.
like a debt collector, and then you can mess up
Right.
your whole
Now,
credit
now,
rating.
now, I will say, if you are like an international, right? If you're like a Mt. Gox creditor, I don't know, from like Thailand or a more hostile country to the U.S., like something you have bad relations with, and you got that money, then yeah, you can probably hold out a hell of a lot longer and not care. But if you are a U.S. citizen that just got that Bitcoin, yeah, you may want to return it sooner than later before you spend more money on lawyers than both sums combined. Joe, you want to weigh in on this?
No, you covered it spot on. It's unjust enrichment. You can't get money for nothing.
100%. Go on, Joel. You had a question?
Yeah, no, I just wanted to add to what Tony was saying. It depends on the jurisdiction about giving the money back. Because depending on what country you're in, some countries will view it as the bank gave it to you, it's a loan, and you have to pay back the loan. That was their thing, but you could do it at your own pace. And then there's actually some countries that if the person doesn't give it back, it was your mistake, and that's it. Because unless it's coming from an actual bank that's protected by the government from which you're in, that's not true for every country. And you'd be surprised at some countries in Europe that still have very draconian laws when it comes to those type of mistakes. It's happened to me. That's why I know.
Unless they're not a member of the Hague Convention, which the vast majority of countries are.
Yeah, but also just the expense of the legal case of reaching out through an international settlement case. If the money's not worth it, then it's not going to comes down to
Right.
a basic cost
And
benefit
keep in
analysis.
mind, the money spent on lawyers from the other side is free, right? Because all the lawyers are paid from the trust itself, right? So those that get to keep extra money, and if Mt. Gox trustee has to hire more lawyers to claw that money back, that's just less money that other people waiting to get the Mt. Gox payment will receive. So it's on the other side, it's free to hire another lawyer and go after the people that got extra money, and it just hurts the Mt. Gox beneficiaries. But it is kind of, I'm not surprised that they screwed this up even after 10 years.
Yeah, so you got the Mt. Gox, you got the Silk Road, you got the GBTC. Next, you've obviously got Bitfinex. There's 119,000 Bitcoin. Well, I think they've retrieved 100,000 of them from the Crocodile of Wall Street, and those are due to some of the shareholders that had the recovery right token from the 2016 hack, and then also when they had the Tether $850 million bank seizure from Crypto Capital. They issued $1 billion of Leo tokens, and there would be a buy and burn mechanism from some of the retrieved coins. But at the same time, DOJ has obviously had an ongoing case with Bitfinex, which is still to be unresolved. So on one side, they're trying to settle with Bitfinex, and on the other side, they've got money that's owed to creditors from the seizure or from the Crocodile of Wall Street case. So that would be resolved at some stage. But one by one, all these major kind of pockets of Bitcoin are washing through, and we're just absorbing it. So it's pretty amazing.
Simon, are you familiar with the Gall miner hashlet?
Oh yeah, Paycoin.
Yeah, I was part of that, but they just arrested. I wasn't part of it. I was an
Josh Garza,
investor.
yeah.
Yeah, exactly. Well, they got Josh, but then he had like 2 other associates that supposedly had all the money, and I just saw something come across because I've been following it forever.
Wow, no way! I still
got the T-shirt.
I still have a hat. I still have like a hat, and like I used to have like gloves. I remember when they were the main sponsor of like the Miami conference back in 2014. I was there. I think you were there, Simon, as well.
Was that the Ethereum launch
too?
one? The Ethereum launch and Charlie Schwem arrest one?
Yep. Exactly.
Oh no, I think that was the year before. Sorry, so this would have been 2016 maybe. The Ethereum launch and Charlie Schwem was the year before.
Okay, yeah, they're all.
But it's the same event. The same event, and yeah, I remember that well.
Yeah, I mean that was crazy. I mean they were the largest supplier of miners in the U.S. and they launched a scam coin. But besides the point, they just arrested 2 of the main guys. They got the extradition approval because I think they were hiding out in like Slovakia or something like that. And I saw that just came through. I wonder how much is there because I would assume a lot because back then, I don't know. I think crypto was like 400. I think Bitcoin was like $400 or something like that.
Yeah, I guess we still got Plus token. I don't know I can't remember what happened with that one. That was a massive one in China. And then we got OneCoin still not resolved, is it? She seems to have.
That will never be resolved. That's
another scam level.
That's the best. That's the highest scam possible.
But I don't think. I think the Plus token Bitcoin has already been, kind of dissolved through the system, and the OneCoin. I don't think they ever had all that much Bitcoin to begin with, so I don't think those Ponzi schemes, while there were, Bitcoin-ish related, I don't think they're affecting the future price. The one that worries me is, Simon, do you have any idea what Block 1 is doing with their 140 or 60,000 Bitcoin? Did they ever liquidate that? Did they because we don't know. That's the EOS stash. And I can't believe they're sitting on that much Bitcoin. But what they plan to do with that in the future worries me. That's 140,000 Bitcoin in the hands of, basically shitcoin creators.
Yeah, I think they're still playing token VC with that one. But yeah, they're just sat on this it's a massive pool of capital. And yeah, for all I know is that they were just wrapping it in Ethereum and putting it in DeFi contracts and just living off the interest after scamming all the investors with a fake blockchain that hasn't done shit. Wasn't that how? What was the connection there with Michael Saylor and the fake social? Didn't he own the domain or something to a social network they tried to create?
No, I don't know. I don't remember that connection
not
at all.
Michael Saylor to it, but he first got into Bitcoin because somebody wanted to buy a domain that he owned, and it was like and it was from the Block 1 team because they wanted to launch a decentralized social network, and that's when Michael Saylor said, let me get back into this, and then he started looking at Bitcoin again, and then he just went full on Bitcoin.
Oh, I gotcha. Yeah, no, I'm not familiar with that. I just know that the SEC tell them everything is good if you pay a $4 million fine, which was a complete joke.
Yeah. There's also, do you remember back in the day, there was the Bulgarian government seized a bunch of Bitcoin, and when it went into the bull market, it was worth more than their entire national debt. But the private keys just disappeared into corrupt politicians and stuff. But they literally could have paid off their entire national debt with that seizure.
I tend to be skeptical that the government actually has the private key. I don't think Bulgarian government ever had it. And yes, if they did have it, I'm sure it's just like with Ukraine, right? Like Ukraine is still listed as having 46,000 Bitcoin. There's no way Ukraine has that. Either they never had the private key, or that Bitcoin has already been spread out amongst political elites and it's gone.
Yeah, even Mijinski was raising a bunch of for Ukraine project. I don't know whatever happened to that. He was like getting everyone to contribute. That would be an interesting one.
It's in a hardware wallet in his Miami condo, probably.
Yeah, pay him for his legal case, trying to get himself out of jail.
Or survive.
All right, let's give it back to the host. We had a good walk down memory lane.
Yeah, that was a good one. That was a good one. I learned a few scams that I didn't know about, so that was good. But we can carry on over a Zoom call as well regarding this if you guys want after this call. But let's move on towards a little bit of macro, a lot of Bitcoin discussion. And guys, before I go there, if you haven't followed us, do follow us on Twitter. We share a lot of macro-related news every day, macro-related insights, research from our Fin Summit research team, and it's amazing and it's fun. You can go and see our timeline; it's really good. So moving on, Tone, to the US, your favorite country, your birthplace. The total debt has reached a new all-time high, $34.109 trillion, to $42 overnight. That's a lot of pressure on Fed. And you said you don't expect any rate cuts. Now, the Fed also increased their bank-to-bank, the BTFP, and they have increased it, and they said that they're not going to be making any new loans from March the 11th. What should people read from this? Start off with Tone, and then let's bring Joe in. He's been quiet for a while.
Oh, sorry. I'll let Joe go. I'll let Joe go.
Yeah, Joe, if you want to step in first.
So the question is about the debt.
It's about the debt. It has obviously risen to $42 trillion overnight. And again, about the PTFP that they will stop from March the 11th. And also they raised the rates, if I'm not mistaken.
Yeah, okay. So obviously the debt is a long run serious issue, right? Nobody disputes that. The question is, like, what is the immediate effect? How important is it from an immediate basis? I don't think it should basically factor into any of your short or near term, intermediate term market goals. If you look at net interest costs as a percentage of GDP, we're actually below levels we were in the 1980s and 1990s. So that's measuring the interest cost versus our productive capacity. And I tweeted this chart out a couple days ago. I'll tweet it in the nest in a second. But everybody's sharing just the interest cost from a nominal basis, but you have to measure it against the world's strongest economy, which still undoubtedly is the United States. So long run, it becomes a problem. Long run, I expect more monetization from the Fed. Someone's got to buy those treasuries, which we talked about earlier. But short run, there's nothing to say we can't go to debt to GDP levels of 150, 160, 170%. I mean, Japan's at 200%. So that's just my view on
it. Tone?
Can I ask Joe a question? You don't mind?
Yes, please go ahead.
Yeah, Joe, I mean, a lot of people are like, this market's confusing. Why are we going up? Numbers are coming down. I don't get what's going on in the market. I don't get what's going on in crypto. And you have that sentiment even from professionals. And my argument's always been, well, if you look at the debt, I don't see a way out of it without printing. And I think that's kind of what everyone is kind of betting on. You don't see that, or you do? You do.
Well, I mean, if you're going to talk about, so let's define printing, right? So like printing, in my view, is effectively monetization of government assets. That's how I define printing. Okay. And direct monetization of government assets will happen in the future. There's no doubt. It happens actually every day because right now, they're running QT, but QT only has targets. So like when a bond matures on the Fed's balance sheet, it actually gets replaced. And there's a lot of bonds that do get replaced that are not part of the QT program. But like the bigger issue I think you have to focus on is like, to what degree, like how much of federal securities have to be purchased by the Fed? And to me, like you're not even near peak capacity there. So yeah, I think that your general premise is yes, that's correct. You get more monetization in the future, but how much? Like to what degree? And like why should that be a factor in your short run investment decisions?
I'm going to
Go on,
jump in
Tony.
on this, and I have a very specific answer. It's impossible to print your way out of the national debt. Now, the national debt is not really a problem for risk assets. So when it comes to the stock market making new all-time highs, it is completely irrelevant whether the national debt is zero, 30 trillion like it is today, or 300 trillion like it could be. It is they're completely independent from each other. They have nothing to do with each other, in my view. People speculate on stocks based on how well the big boys speculate on the stocks based on how well they think these companies are going to do into the future. And some of us, plebs, we use technical analysis because we don't have the research capability of the big institutions or the VCs that go into these companies with much bigger stakes. So these are two independent things. Now, for the government, from a government point of view, setting the stock market aside, and I do believe that the stock market is going to be bullish for many reasons, from demographics to inflation is going to stay high to safety versus government bonds. And the more debt a country has, the less creditworthy that country is, the more people of that country and people around the world are more scared of investing in the government of that country, hence less desire for government bonds. Less desire for government bonds lead to higher interest rates from the government to sell those government bonds. And since the government cannot run on a balanced budget, they always have to remonetize the debt. So every 10 years or so, that entire stash of $30 trillion, not the entire one, but like 90% of it, will get reissued, but now at a higher interest rate. And the higher your overall debt level is, usually the higher the interest rate. Japan somehow manages to still avoid this, but I don't know, it's a little different in Japan, I guess.
No, it's the opposite. It's no different. That's exactly the point. Debt is inherently deflationary. Debt steals money from your future self, thereby undermining the productivity of your economy. Debt crushes productivity. You're borrowing from your future self. And this is this is the same across the board. As debt levels have risen across the world, what have interest rates done? They've trended towards zero, or in some cases negative. You had negative trending debt. So I don't agree with that at all. I think that the more debt that's piled on, the more likely you're going to have lower interest rates.
Well, we'll see, right? Because look, the U.S. has a lot of debt, and the interest rate in the U.S. has significantly started to rise, and I think it's going to stay a little bit higher. But again, it depends on
4%, historically extremely low.
Yes, I agree. 4% is historically extremely low. But right now, 4% is fairly high considering how much debt the U.S. government has cumulatively at $34 trillion. And as that debt gets reissued at 4% versus 0% that it's been hovering around for over a decade now, this will pile on the debt even more. And this creates a big problem for the government. But that's independent of the stock market, because like as we started off this discussion with Tesla, and someone commented to this discussion that Tesla has a factory in China. Yeah, they do, and Tesla doesn't have to be a U.S. company. If something was to happen in the U.S., if the U.S. was to fall apart, if it was to have a civil war, all of these American companies will just not be American companies, but they will continue to do their business because some of these highest grossing companies are international companies. A company like Netflix doesn't even need a headquarters. What about Facebook? Why do they even need a headquarters? They can do the whole job remotely. Everybody can. They'll need to have servers somewhere, but they can, spread that around the world. So these U.S. companies don't need to be U.S. companies. So people need to really, separate their views on the stock market and their views on government debt. And as I've been saying for a decade, less and less people will be willing to invest in government debt, but the money has to go somewhere. So where does the money go? If it's not going in government debt, what are your options? Stock market, precious metals, real estate, and Bitcoin. I prefer Bitcoin, but stock market is my second best choice. Real estate is third. And after that, precious metals. Simon.
Okay. Wait, no, Sam is going to talk for a second, but you say less and less people. Let's just look at the numbers, okay? These are numbers as of early January. You've got $34 trillion of U.S. federal debt, and the Fed's balance sheet, which has been engaging in QT, everybody likes to say money printer go burr, right? 7 trillion, okay? And by the way, that includes the TGA, which is that's cash held for the Treasury. So it's not really 7 trillion. It's actually close to like 6 trillion. But putting that aside, let's use the 7 trillion number. That means that 20% of outstanding federal securities are held by the Fed. 20%. Okay. So for those wringing their hands about the debt, that means that 80% of the remaining treasuries out there are being held by other institutions, private individuals, pensions, insurance companies, foreign governments, foreign actors. 80%. And people are ringing about the debt being unsustainable with 4% interest rates, running, historically very low rates. It's kind of silly.
Right, but there's a trend, Joe. There is a trend. Foreign governments are less interested. Individuals are becoming less interested, but it's the pension funds. It's the internal pension funds that are picking up the slack.
For sure. That's why I said long run, it's a problem, right? But the long run, we're all dead, right? That could be 30 years from now.
Let's bring Simon in. Simon, you have something to add?
Yeah. From my perspective, firstly, short term, I don't bet against the Fed because I believe there's a problem for most of my investing life for 20 years. And when it will actually happen is another thing. I do believe that in my lifetime, and I'm 43, we will see a change of world reserve currency and a change in empire. And I think it's cognitive dissonance to believe that it won't happen this time, because throughout the entire history of humankind, I operate off a belief that every fiat currency is a Ponzi scheme. And so you have to have more debt until eventually you reach the stage where you're borrowing so far against your future that you destroy your currency, and then you end up in some kind of internal conflict or global conflict, and then you have a monetary renegotiation. And so the only way to solve the problem, from my perspective, is it's interesting that Circle's IPO right now, because I do think that combining capital markets with stable coins that are backed by government debt and the whole CBDCs thing is going to be the only way to get yourself another decade in an empire where there's massive escalating military expenditure that's needed. And so to me, the trends that I see, and again, no one knows the timing of these things, but I think America, one of the biggest problem is obviously America wanting to fund the whole NATO side and weakening of Russia. America wanting to stand by Israel, trying to avoid a war with Iran, but Israel dragging them into that. I think these are really big problems that America doesn't really want to face. And I think it's cognitive dissonance for people to believe that they will always be a superpower and there will never be a change, because that's just not the story of history. And so I believe we will see that in our lifetime. And it will happen with whoever the next superpower economy is and superpower currency. So I always operate from that assumption. But there is one way, there is one tool, and that is switching from capitalism to communism, which is the central bank digital currency thesis, which is go take out the banking system, go direct from government debt to stablecoin or CBDC, destabilize the banking system, and replace everyone's bank deposit with a CBDC in order to deleverage money and move away from free market digital currency to a more communistic style. So I believe you have to give up on the American dream and what made America successful in order to save itself at these levels of debt, or it keeps it, pays down the debt, goes for more Austrian economics, but that's value destruction in a debt-based Ponzi scheme, which is what all fiat currencies operate off. It's very grand understanding of what currencies are, and trying to trade that, you'll probably go bankrupt in the process. So just own Bitcoin is my way of dealing with that one.
So is ours, Simon. I'll go to Joa first, and then Joa, I'll come to you. Joa.
Yeah, I mean, I think what Simon said, and you didn't say it this way, and I don't know if you agree, but a lot of these things are linked. A lot of these things are to protect resources, trade routes, and I have been a singlish voter against CBDCs because I completely agree, and I'm. It's actually the first time I heard someone else say CBDCs leads to communism. So I'm happy to hear it from other voices as well, because I do believe it's a serious danger to Americans.
Not just to Americans, I think every democracy that is there. But yeah, I'll still love to hear from the other speakers, Joe.
Yeah, so a couple questions for Simon, and I appreciate his take on this as always. I'll just start with that. First off, I don't see at all, and maybe you can respond to this, how, I completely agree with the draconian oversight and limits of freedom and move towards socialism, communism, whatever you want to call it, with the implementation of a CBDC. However, I don't see how the CBDC in any respect fixes the leverage in the system and causes a deleveraging, which I thought I heard you say, which maybe you can clarify that. The other aspect, I think, is I agree with you on fiat currencies. I don't dispute on that specific point. My question to you, though, is, on a relative basis versus countries across the globe that have nowhere near the privilege, have much more debt, have poorer demographics than the United States, why the U.S. dollar would fail versus them, all these other fiats first. To me, it seems like the front line, those who will have the biggest problem first, will be emerging markets and places that are far less advantage from a relative basis. And when you're talking about currencies and failure of fiat currencies, it's all relative, right? I mean, do you have more confidence in developing emerging market currencies versus the dollar? I think that's a huge stretch.
Yeah. So, so the obvious elephant in the room is China, and China's allowing its banks to go bust. It's already used to being ruled by the China Communist Party, so it has no issue with that transition. It's already
Sorry,
got it.
Simon.
Yeah.
So you just talked about China. China just injected a lot of liquidity into the market. So saying that they are allowing it to go bust, I think they are taking steps to save them now, aren't they?
Well, the ones that they believe are good debts, but they're also the ones that they believe are bad debts. They're just letting them fail, which I think is really positive.
China's a basket case. I mean, it is. They have so many problems from demographics to everything. They're a basket case.
Sure, but China could do the strategic opportunity I see for China right now is obviously it's done its IMF strategy. So the Belt and Road Initiative is making it have more friends globally than America. There's only one country that could deal with the actual peace that needs to be negotiated right now in terms of Iran and Saudi Arabia. It's only China that could negotiate such a deal because it hasn't taken a side. Whereas America's got clear sides now. It's got Israel, it's got Saudi Arabia, and it's made enemies of Iran. It's continued to make enemies of Russia. And so, to me, if this completely escalates, then it's just like World War II, where all America needed to do was allow Britain to blow itself up, and be completely involved, and the Europeans to be completely involved in the war, while it funded the military-industrial complex. As long as China can just stay on the right side of all the strategic partners, if this escalates into wartime economics, then I think that's when you can end up with a big monetary renegotiation. I think CBDCs will be that conversation, and I think China has already culturally able to adjust to a world with more communistic style and I just think that's the next era that we enter into, which is why the importance of Bitcoin, because capitalism, because they gave the ability to create money away to the banking system, because all digital currency is created by somebody else's debt, and because they outsourced the money creation, where you always have more debt than money, then you end up in a Ponzi scheme, which is what America has to deal with, and that's why the debt always increases, and you always have to bail out, and it would be the same for any other country. So it's just about strategically positioning in a time when maintaining an empire is no longer profitable, and I think that's what we're seeing right now. Maintaining an empire is no longer profitable, and either America allows all its foreign bases to be blown up in this war, and accepts that it can no longer afford to run them, or there may be an escalation that causes, I think, a debt cycle and a big change in world order.
So just to be clear, you don't believe that the CBDC will be fungible with old dollars? You think it'll be a new dollar effectively? Is that what I'm hearing you say?
Well, if you issue it debt free, or whether it depends how you issue it. But at the moment, if you issued a debt free form of money that replaces all of the bank deposits that are backed by somebody else's debt, and then had a big restructuring of all the debt, that's what I think would be a chosen solution in a monetary renegotiation and a CBDC.
But you would destroy the currency. That would mean that no one would hold U.S. debt. Period. They would never want to. Why would you hold U.S. debt if it's not fungible with current assets?
They already don't, because they already confiscated Russia's debt, and so a lot of the world is reaching that stage where they're scared to do that.
They didn't confiscate the debt. They confiscated the FX reserves.
Correct.
But that's not debt.
And they're already trying to get approval to pay. Take the money that they confiscated, give it to Ukraine in order to strengthen them. That's a big problem globally. That's a big problem for people in terms of holding their reserves in dollars and lending to the US government. And so where's the next form? You have to roll over the Ponzi. So where is the next source of who's going to buy the bonds? Stable coins, CBDCs, direct from government debt, backed direct to CBDC, I think, is the only source.
Well, Tone,
Hey guys.
you had your hand up for a while.
So this is potentially my favorite topic ever to discuss, and this space has already gone on for 2 hours. So I would love to do like a dedicated space specifically to this topic. I will just throw in my 2 cents, and then maybe sooner than later we can actually just discuss just this. These are 2 different things, right? Like, so I agree with Simon, and I also agree with Joe in that, yes, I believe in my lifetime, and probably around the turn of this decade, I think the United States will lose superiority as the world superpower, and the dollar as the world reserve currency. I think that's coming sooner than later, definitely in my lifetime, and probably within the next 8 years. Maybe not by 2030, but by 2032, 2033. Now, to answer Joe's question, who's going to step up? What's next? I have absolutely no idea. And the best candidate is China, like Simon mentioned. But no, they're not even close to doing it today. But we were also in these arguments years ago when people are like, oh, how is Bitcoin going to be a global currency? Look how small it is, how weak it is. And it's like, yeah, it's like 7 years old. Like, give it 20, 25 years, right? So it's possible that by 2035, there is no single country dominating. Each country has their own currency, but also each country has Bitcoin, backing and gold and whatever their country produces. Like, you don't necessarily need gold. Like, if your country has massive amounts of platinum, you'll be able to use that. And if your country has the Panama Canal, you'll be able to use that, right? Like, each country has a strategic, advantage over other countries. And when they don't, they need to have, other ways. Like Switzerland, for example, had a competitive advantage through their banking, which they decided to destroy, but that's on them. So I don't know what's next, but I'm with Simon here, and I had 3 main reasons as to why it's going to happen. And one is, yes, the war can happen. Also, I believe the United States will split into either 2 countries or 4 countries or 8 countries, who knows. And this thing in Texas, yes, this may not be the end of it, but who knows how it's going to escalate. But I mean, these are the kinds of things I've been talking about for 4 years now. And everything changed for me with the 2020 election. So I'll just leave it there with the 3 reasons. A country collapses when the world no longer trusts its political system, when the world no longer trusts its military strength, and the world no longer trusts its economic superiority. America had all three. Like, they were crushing the world in all three. They were the strongest military, they had the most transparent, most trusted political system, and the way the president's elected and the way Congress is elected. Of course, there were some shenanigans, but compared to other countries, it was the most trusted and the most transparent. And it had the most trusted and transparent economic system. All three of those things are now in the toilet. The military is proving that they're not all that strong with what's happening in the Middle East and in Russia, Ukraine, and they're still trying to start more wars. The political system has shown its corruption left and right with the 2020 election and what's happening since then. It's obvious to me, it's not obvious to some. And the economic system and the financial system, with everything that Simon says, is like kicking Russia out of SWIFT, looking to confiscate Russian foreign reserves. This is showing the world that they are not the most trusted and the most transparent financial system either. And these things are escalating with an exponential rate. And by the end of this decade, all three will be no different in the eyes of the rest of the world than a country like China or Russia or Brazil or any other major country that we used to laugh at, how corrupt they are and how irresponsible they are and how incompetent they are. That's going to be the US. So by the end of this decade, there will not be that much separating China from the United States. So it can be China. I don't know if it will be China, but they are the best candidate. Maybe after China will come India. We'll see.
We have seen bigger empires collapse, so well, it's nothing new in the human civilization. So let's see what happens there. Joe, Joy, you want to bring in something?
Yeah, just the possible two possibilities, which is if you look at the business world, all the big L'Oreal, Budweiser, for example, they didn't get taken out by one big competitor as in the past. Budweiser used to have like 65% market share. It dropped all the way to 19 because of all the craft beers, thousands of craft beers, right? Basically the decentralization almost, but happening in the business world where a lot of local producers, same thing happened with L'Oreal. Every influencer under the sun has launched a makeup brand, taking away market share from L'Oreal, which is actually the biggest threat is the hive. And I think in the future, that's actually a bigger threat than some big hegemon that's going to take over US's place. I think it's more of a network of people. Plus, there's another factor, which is the empire controlling the global reserve currency has not always been a thing. There is a possibility, and this is why I've been betting on Bitcoin forever, is there could be the return of a gold where gold was used in Roman Empire, was used in English Empire. They didn't control it. It wasn't a part of government strategy back then. And I think we could return there because we see this experiment of fiat isn't really paying out too well. Just another possibility here.
Oh, 100%. Well, anything to add, anyone? Because that was the last topic on my list. If anyone has anything to add on the topic that you were discussing.
Those are really two different things, right? I don't think you can have a decentralized reserve asset. You can't have reserve assets in pockets. They tend to trend towards one asset or the other. So I don't understand how those two things jive together. Either you're trending towards a centralized reserve asset, something like Bitcoin or some other. I know they put forward proposals about commodity-backed currencies and things like that, but you don't tend to see that historically. That would be atypical.
Yeah, no, the decentralized, Joe, is the government. Who's the next empire? I believe could be actual multiple players working together instead of just one big country, as has happened historically. The decentralization wasn't about the global reserve part. They're two separate things for me.
Yeah, I mean, we kind of have that already, though. We kind of have already a bipolar world currently.
Like we have the West and the East, so it's I do agree with Joe on that. But yeah, let's see who is the next big thing. in the world politics. Well, Tone, any closing thoughts? So I'll go one by one. Tone, I'll start off with you.
No, that's it, guys. Please follow the Financial Summit handles here on Twitter, Instagram, and the YouTube channel, which will be launching many more financial shows. Hopefully, Joe and Simon will be joining us on videos as well, doing some of these deep dives.
That is true, and a lot of shows are. We have a live show every day, guys. Stone and Matthew from Alpha Numerics, they do it every day, and it's a lovely show. If you haven't watched it, do go and watch it. Joe, any closing thoughts?
Oh, was that to me?
Yes, that's for you.
No, I just think it's the story of the week's going to be, will the GBTC pressure abate? But from a macro perspective, I'm really looking at the Treasury funding. We didn't talk about it very much, but other than the beginning, but we really want to see what Yellen's going to do with her balance sheet, and is she potentially going to really juice markets here? And I think there's a significant possibility she does decide to do that with very limited coupon issuance.
Simon, any closing thoughts from your side?
Yeah, I'll just wrap up on a few of those things very quickly. So, firstly, I do believe that the US Constitution is the greatest foundational guiding document the world has ever written, and it did require hard money in it. And unfortunately, that got deviated with, so it goes where it is today. The There's also the whole AI thing that's getting a little bit wacky, but there is going to be a time when central banks are governed by code, and that is certainly coming. And watch out next year. The Bank for International Settlements has been doing, in consultation with all the central banks, how to manage backing currencies and CBDCs and central bank reserves by virtual assets, and that includes Bitcoin, stablecoins, and shitcoins. And they're actually putting down their governing structures around that right now. So that comes out in 2025. So you could end up with CBDCs which are backed by a maximum percentage of Bitcoin, and they're already creating the regulations on how to govern that as we speak. So watch out for that one. I'll join you in future videos, definitely.
Well, the central banks being governed by code, it's already in. It's not the thing of the future. It was there for the last decade or so. It's called Bitcoin. So hopefully that is our future central bank. Joa, anything from you to finish up the spaces?
Just a great space. You have, three of my favorite people that talk about crypto. So I was excited to see Tone, Simon, and Joe up here. I really enjoy listening to these people about crypto. And just a warning to the audience: if you hear what we're saying and you get excited and want to go leverage your portfolio, I just advise you don't do it. And I think most of the panelists would agree it's a killer of your portfolio. I regret every time I've leveraged almost, except if I take like 5% of my portfolio, maybe do it with that, but don't do it. Don't get greedy. There's plenty to be made. Just be patient and DCA your way in.
Yeah, I'll just comment on that. That's 100% right. Like, for the hell of it, me and Matt McGregor do a trade every morning on our show. We enter a trade, and then we look at the following day on the next show, who did better in that trade. And usually we put less than 5x leverage. Like, sometimes it's 1 or 2, like 2 to somewhere between 2 and 5. Very little leverage, and on smaller starting capital. So you got to be careful. I just want to say, Simon, I agree with you. The U.S. Constitution is the greatest document ever written, but that document is now almost 300 years old, and it needs a complete rewrite. Like 80% of it's going to remain the same, 20 more additional parts, and explanation on the current parts of the U.S. Constitution that it's a negative restraint on government, not the burden of the people to prove why the government is putting on unconstitutional laws. But yes, in general, I agree with you. And yeah, one last thing I wanted to comment on. The one thing we didn't talk about is the price of Bitcoin. So it sucks after Joa just said don't trade. But I will say that, look, we just rallied 10% in like 6 or 7 days. We're now pulling back after attempting to breach 2 moving averages. I think I would be careful right here. For me, I become a bull above $43,500. until we break $43,500 right now, we're just got rejected at a very clear resistance level. So I would not be surprised if we do end up pulling back next week, back to that $40,000 area. I really hope that the 38,000 low is here to stay, but we did not reach perfect support levels in the $36,000 to $38,000 area. So my perfect support for a buy the dip was closer to 36.5 than 38.6 where we reversed from. So I'm still a little skeptical on the breakout here. I think a little more pullback or some consolidation here before any kind of rally. So I am still being cautious.
Well, there you have it, guys. A lovely, lovely space. We covered so many topics from so many great speakers. It was amazing to have you all in today's space. We look forward to talking to you all again on Wednesday, most likely, if the availabilities are good. And again, to have this sort of a conversation and to discuss what's really happening in this world and what is there on offer for us. We'll have a few numbers out by then. We'll also have a few earnings out as well. So looking forward to talking to you all. Thank you so much. And yeah, have a very, very good week ahead. Take care, guys.